All right, good morning, everybody. Let me know how the mic is sounding today in the chat. Do I sound like a robot again? Do I sound fine? I'd love to know. It's going to be a bit of an interesting morning session here, obviously, with everything that's going on. But some mic feedback would be fantastic. Definitely would appreciate that. How's it going, everybody? Alex, yes, it is a sad, sad day. It's unfortunate what's going on overseas. Is it robotic or is it better? I'm seeing a couple of mixed emotions there in the chat. Sounds good? Good. Sounds better. Awesome. Fantastic, guys. Thanks for the feedback here. Obviously, let's get the elephant out of the room immediately. Russia invading Ukraine, it's not a good thing. Obviously, it's causing markets to move lower. If anyone has family involved over there, I truly do wish everyone the best. War is never a good thing, obviously. I mean, it doesn't really, it goes without saying, rather. So first of all, that's what I wanted to say. Is if you've got any involvement, any family over there, I wish them all the best. Okay, truly. However, we're over here. At least I'm over here in the States. Maybe some of you are as well. And we have to deal with the markets, right? This is our job, and unfortunately, it's impacting what we have to do this morning. So that being said, we have a couple of things on the economic calendar that are not in relationship to the tensions overseas. The first ones we should point out, and obviously the market doesn't really care about this right now, are of course the unemployment claims. It's all about what's going on overseas. It is what it is, but we did get unemployment this morning. Should be interesting. The other thing is that we'll have a couple of FOMC members speaking today. Then the big one will be Corp PCE. It's not CPI data, but it is an inflation read nonetheless, okay? So that'll be helpful in terms of gauging, what the FOMC board may be thinking about as we move into those next meetings and meeting minute releases, press conferences with Jay Powell. So those are the main things to be watching out for. As I've pointed out, for anyone new trickling into the room, the market is focused on the tensions over C right now. That's driving the marketplace, obviously, right? So with that being said, let's continue along here. What do we have for earnings? If we pop on over to this screen, obviously after the close yesterday, we got Fubo, Skills, Hertz, eBay destroyed, right? Lemonade destroyed as well. Everything's basically opening on a gap down. It's very likely everything opens on a gap down this morning. It just is what it is. It's going to be very, very difficult today for any sort of turnaround to really be underway. Alibaba's gapping down on earnings, even amidst, I would say if that had a fantastic earnings report, let me frame it that way. Even if this had a killer earnings report, it's not going to be gapping up given the current market conditions. Moderna taking a hit there. Coinbase, we'll get that after the close today. Should be interesting there as well. Okay, so that's really our earnings calendar here. We'll take a look at some of those names, but everything in the marketplace right now is not feeling the love, right? It's really, really tough morning out there. I will say, and this is not, this is just what I'm doing. This doesn't mean you have to do it as well. But in my longer term accounts, I did take a little bit of a nibble. I put out some orders this morning to buy, just your big S&P broad market indexes and a couple individual names that I believe in. So if you have a longer term account, it might not be a bad idea to start nibbling on things. I'm not saying go all in, but a little bit of a nibble might not be a bad idea as we start to dollar cost average into any potential protracted down move that may come for the foreseeable future, given everything we know about what's going on, okay? So that's kind of the state of where we're at from a more news-driven perspective. Let's get on over to the platform, though, and start talking about potential scenarios here in our futures, okay? So ES futures, here they are, our good old faithful here. Opening on a gap down, right? So we always ask ourselves these three questions. Number one, are we opening on a true gap up or down? And yes, absolutely. We are opening well underneath yesterday's low of day. We're opening on a gap down, a true gap down, right? Tushar, we're going to get into the approach for today right now. This is what it's all about right here. So question number one, true gap down. We'll put a little arrow here for gap down. Question number two is where are we opening in relationship to the overnight range? I would say we're definitely in the lower third. Maybe even further lower than that, right? We're pretty close to that overnight low. So there is potential here for a shock and awe open, noting that we're opening far outside of balance, right? Because there's an inventory imbalance as well. This is question number three. What's the position of the overnight players? Well, if we were to just look at where the close was, which is basically the overnight high, let's just use that, right? There is essentially zero activity taking place above the close. Therefore, all of the overnight inventory is net short, right? So being that the entire overnight session is net short, being that we're opening very close to the overnight low, and we're opening on a true gap down, there is potential for a shock and awe open here where we could get some inventory correction. Now, again, this is how we traditionally view the marketplace. That's, what we would look for on a quote-unquote normal day where we're gapping down. But given the circumstances of how we've arrived where we're at, the news that's coming out, of course, maybe just size down, okay? This isn't, the news could very well just mean, okay, we continue on our merry way to the downside. We don't have to get the inventory correction, but there is possibility for it based on the opening of today's session, okay? So this is how you're going to play it. Gap rules will be in play. If I just go ahead and expand this for a second here, anything that does this is a look below and fail of the overnight low. Trades long back up through the opening print for the gap to start filling. Now, because the gap is so large, it's going to be a complicating factor. We're not expecting it to fill all in one day, although it could use some time to digest, right? So typically, we are looking for a half gap on something this large. So let's take out our Fibonacci's. We'll come in from the overnight low up to the overnight high, basically up here. And your half gap is aligned with prior overnight structure as well. So 4163, we'll call it for round number's sake, would be the upside target. And volatility is going to be screaming out there today, right? You can see in the overnight session, the ranges that we've traveled are gigantic, even better than what we've gotten on some prior days in regular trading hour sessions. So I wouldn't really write off the possibility, although the range is absolutely humongous, right? The fact that we could get to half gap today. Again, that's 4163 in our ES. If we have some sort of look below and fail of the overnight low, trade long back up through the open, or if we never get to it in the first place. So if we fail to take it out, trade long up through the open, there's your target, right? Take off at least, I would say, 3/4 of the position given the current market environment, and then look to monitor for continuation on the remaining quarter until we can get into that yesterday's low of day. And again, if you're scaling down, you always got to be out. Like if you only have one contract because you've scaled down and that's your position size, then you just have to be out at halfback, right? It's not worth risking. Or you could move stop to, you could trail your stop higher, break even, and then here as it works its way higher. That's another strategy you could use, but I would look to book profits aggressively if we're fighting the overall downtrend and the news flow today, okay? We're really just banking on an inventory correction from the shock and awe. That's what I've got in the ES futures to the upside. To the downside, clearly, if we're breaking down underneath 4,100, then what do we have for supports underneath? Let's go out to a daily time frame chart just to see. So there's not enough on this contract. Let me go to the continuous contract and we'll see what we've got. Just the ES is what I want. Here we go. So what do we have for supports underneath us? Likely this area here. So 40.60, that's 40 points underneath us. Maybe a little bit more than that. 60 points given that we're currently trading 41.20s, right? So that could be a valid target. Anything below that, let's grab a little bit more time here. What do we have on the 2-year chart? So supports underneath here, probably this breakout point, right? We're looking at 39.50s, all right? So I'm not saying that the market has to continue to crash, but it's very likely that we do see some continued selling pressure here if we don't get any sort of gap fill scenario, right? So let's go back to the contract we want. There we go. Getting back down to our 15-minute time frame. There we go. So that's our ES futures in a nutshell, all right? It's going to be a tricky one to navigate given the push-pull that we see, right? The skew to the downside, the inventory position is net short, but the news flow is definitely supporting a move lower, okay? So that's what I'm going to be watching out for primarily off of the open just to see what else is going on, right? This is going to help drive all of the other decisions in the marketplace, right? So that's going to wrap up the ES. Actually, what we should do before we wrap it up officially is come on over to our market profile. And what I wanted to illustrate here, I talked about it in the video from yesterday. Notice that the point of control here is very low in the day yesterday. So if there is any sort of upside move here, that's going to be your magnet, right? And once again, that level is just above yesterday's low of day, 42.25, all right? That's what we've got in the ES. Other than that, poor high in here, not really going to be in play on a day like today with a massive gap down, right? So that is the ES in a nutshell. Let's continue along, briefly touch on our sectors here just because they're getting hammered, right? And while I'm flipping over to the sectors, if you guys wouldn't mind, please click the thumbs up button if you're appreciating today's stream. I would greatly appreciate it. And all right, so the XLE is the only thing that's moving to the upside in terms of sectors, right? And obviously, that's because of the supply issue if Ukraine sort of shuts off, right? So a little bit of a gap up here, opening around 69.60 as of right now. So that's somewhere in here. It's the midpoint of this overall flag. So I would be patient inside of energy. Sure, it is showing relative strength here, but the breakout is it's really still got to be up and over these highs, which are roughly 70.10, 70.50 if you want to use the true high of that flag there. So yeah, it could move higher, and that would be your target in here. But after that, the larger break will come from that sort of move right around in there, all right? So that's energy, relative strength, keep an eye on it. Everything else getting absolutely hammered, right? Financials, destroyed. Big gap down, moving underneath our level. Oops, we want this one right here. Underneath the bottom end of the range from the daily. We talked about this in last night's video. We're underneath the bottom end of the range, so horrific, right? In terms of the XLK for the tech sector, same deal. We talked about the head and shoulders pattern. We talked about 143 being the first potential target. We're underneath that as of the gap down currently. So there's blood in the streets out there, all right? It's going to be a very difficult trade to pull off this morning, which is why I'm going to keep it simple. I'm not going to focus on too many things. I'm only going to be watching the ES futures and how we react to the gap down, all right? Very, very simple. Let's move on over to the S&P 500 just to see where we're at in terms of our SPY levels here. And then we'll do the quick poll that we always do. Where do you think the day will go? So obviously equal lows gapping down underneath 415. Our next area of support, and we sort of talked about this in the ES, right, is going to be roughly that 405 in the S&P 500. It's the double bottom. We saw that sort of similar structural level. In the ES, that's what we have to the downside. To the upside, we talked about gap fill possibility if there's an inventory correction, but I'll be watching on the ES as I've pointed out countless times now. So quick poll. How does the chat feel this morning? Do we feel like we're going to get a rotation higher for the gap fill? Drop a 1 in the chat if you think that's likely. Do you think that we go sideways here and digest the gap, meaning that, we get a day's worth of chop, nothing really happens? That is scenario number 2. Or do you think we see continued breakdown because of all of the headlines that are flowing right now? That's scenario number 3. Drop your answer in the chat right now. We'll see what we get. Stacy, while we're waiting for some answers to come in, yes, I mentioned earlier on in today's stream, I do have a couple of orders floating out there right now to buy some longer term things and longer term accounts, broad market ETFs, and a couple of notable companies. All right. That's basically all. I'll be buying some things, but it's a nibble, right? I'm planning on dollar cost averaging. Looks like people are leaning towards 2s and 3s, definitely not number 1s. Okay, interesting. I don't know, guys. I mean, number 1, it's the inventory correction here. To me, that's what I'm watching out for on the open. Doesn't mean it has to come true, but we are set up in a position where it could be a more likely scenario. So let's see. 2s and 3s are dominating the chat. Sideways and or lower is the feeling for the day. We'll see. We'll see. I'm not saying I'm right, and I'm not saying you're wrong. We're just going to watch. We're going to watch. We're going to see which one unfolds. I know the framework I'll be using if we start to get some gap fill, correct? All right. So let's continue into our rest of the broad market. QQQ, notably going to be similar to the XLK. Guys, 122 viewers, 57 likes. That's an okay ratio, but I think we can do better. QQQ anyways, getting into it, gap down, same sort of framework, right? Anything that takes out the opening print after failing to take out the overnight low, look for longs to potentially fill the gap. You got to be careful on these, right? Stop loss needs to be under the low of day. You need to be a disciplined trader if you're going to trade long for the inventory correction in the face of this massive downtrend. This is only the trade for disciplined traders, okay? That's what we've got here. Shorts, sure, underneath the overnight low, maybe if there's some sort of consolidation bearish pattern that takes it out. We know targets underneath are going to be roughly 315.81 for the gap fill down to 315 even. It's not really a range to trade for in there. It's just a target area, right? So that's what we've got there. Anything underneath that in the QQQ, let's go out and grab a little bit more data that we can look at here. Zooming in. So there's your 315 gap coming from here. Underneath that, we have prior structure around 309, 310. Use that as the next target if everything's going to hell in a handbasket, all right? That's the QQQ. IWM up next. What do we have here? Obviously a gap down as well. Same sort of framework. What's interesting about this one is that at first, we were holding on for slightly higher low, right, from here to here, which was different than what we saw in the QQQ and the SPY. But now that's changed, right? Obviously, we're underneath that. 188 is currently where we're trading. The overnight low is 187. Let me mark that in with a regular level. So here we go. On the daily time frame chart, as long as we do something like this, there's your inventory correction to the upside. As long as we don't violate that 188, 187.72, potential for a long-sided trade, right? Looking for the overreaction to the downside to correct to the upside. That's exactly what it is. Inspired, you just asked what an inventory correction is. Exactly what Vinny was saying in the chat, right? Perfect. So possibility for that here, noting that maybe it hangs on for a more equal low as opposed to a dramatic lower low, like we've seen across many other indexes as of right now, right? So that's our IWM. Still looking bearish if we take out the overnight low, correct? We're looking for downside flushes. We know that there's basically no structure in this one. There's a little bump in the road at 184.50, but it's really 165 to the downside that would make the stronger downside target, right? And I'm not saying we flush there all over the course of one day, but there's very little in terms of structure that will support in this general area of the chart, all right? So the main theme of this morning's open, I hope I've been fairly clear about it so far, is we're watching for inventory corrections, any sort of move to fill the gap overhead. If it doesn't happen immediately, again, if it does not happen immediately, let me repeat that. If it does not happen in the first 5, 10, 15 minutes of the day, and the gap does not start to fill immediately, look for sideways and possibly lower, right? Inventory corrections usually need to happen almost immediately. That way you're getting that true shock and awe, the emotional reactions that people have on the open when they're either, well in the money with a short or feeling a lot of pain with an old long, right? That's what needs to happen on the open. It's got to happen quickly. If it doesn't, go in the direction of the gap. That's how we play these things, right? So that's what we have in the broad market. That theme is going to carry across into almost everything that we have today. Obviously, Apple, let's go actually back down to a yearly chart. Apple gapping down big time underneath 157 in the pre-market. So we're basically in this territory here. Do we get the rotation to 152.20 or do we get the inventory correction? If we do, I would watch for 157 as the first target. I wouldn't watch for the full gap fill. So again, it's going to be a little bit redundant today with all of these gap downs, but it's just how it goes, okay? So we need to see, do we get the correction or not? Gaps of this size, more often than not, they do just go sideways. A little bit of digestion here. So that's kind of what I'm watching for on the open, all right? It's as simple as that. Inventory corrections across the board. I know I'm being redundant, but hopefully any new viewers that are trickling in are sort of getting the gist as well. Netflix, same exact thing, opening right on the lows of this move from the earnings debacle back there. As we go, lower or potentially underneath that, we don't really have any structure, correct? So look out for basically no man's land underneath that 352 here inside of Netflix. If it gives us the inventory correction, we know the deal. Fill the gap above, right? Next up, Tesla, taking out all of our levels and some to the downside. A little bit of a bounce here in the pre-market that we have going on. But nonetheless, what do we have? Here's the 693. That was the overnight low. It was also this breakout point from in the past here. There you go. So interesting. Does that hold is probably the question. I would want to see it hold 693. If it doesn't, obviously we know we are in store for chop and or lower. Yeah, Joel, you could think of inventory correction as a bounce. It depends on your definition of a bounce, to be quite honest with you. A bounce could mean this to someone. A bounce could mean this to someone, right? So it all depends on your own personal definition. That's why I like to just call it inventory correction, because we're not really looking for major reversals. We're just looking for the overnight session, which is clearly skewed to the short side, to correct a little bit. Some of those people will close out their positions and we'll get a little bit of buying reaction to the upside, right? So hopefully that clears up the question, Joel. Let me know if it does or doesn't in the chat section there, and I'll try to explain it more if not. So Tesla, again, 693, critical must holds, the overnight low, any bounces here, it's going to sound so repetitive today, guys. I'm sorry about it, but it just is what it is. It's the current market circumstance. Correction to the upside, right? Where's the gap fill to? Yesterday's low, roughly 764, right? That's what we've got in Tesla. Alibaba, with the earnings announcement and pile on top of that the bad news, well, sort of a recipe for a disaster, right? Big gap down here, getting closer to that 100 psychological level. So any sort of bounces, look for retests for shorts against 110, right? This one's an obvious one because the daily downtrend is so strong. Let me zoom in on that a little bit, actually. Anything that does this to magically fill the gap, which again, Alibaba wouldn't be the first candidate for the gap, right? But if it does, make the move higher. Inverted hammers up here, indecision dojis up here, prime for a short, right? Stop goes over the high, short under the low, looking for the rotation back down towards that 100 level, okay? So Alibaba, short opportunity here. If there's any sort of bounce in the first place, I would probably not try to participate in that move to the upside. I would be patient and then tactfully try to short it against that level, right? Tight stop just above. Next up, Facebook, making a move all the way back down to its sort of run-in with the lows that prior pre-market when DWAC launched, right? Nonetheless, holding up at that area, which strikes me as sort of important. As long as we're above 190s, okay, fine, look for sideways. This one has really been in a solid downtrend on the daily, obviously. So I would probably expect sideways out of this one. If it does, obviously we know the drill. Gap fills the target up here, 198. If it continues underneath the overnight low, gets more interesting for a potential turnaround around 174, right? MT Beast, yeah, we'll get to some of those names that you're sort of putting in the chat. We'll see. If there's enough time towards the end of the stream, we'll get into those, all right? Facebook, so that one's covered. We have the downside level 190 breakdowns underneath that, get fairly nasty. Gap fills 198. NVIDIA, gapping underneath the support trend line. Again, this one I figured should have been a short from up here. It's not really a chase down in this area. This is a patience move, right? Because we have all of this support from in the past. You don't want to be shorting into support there. But now that we're underneath the support trend line, I would definitely be watching for some sort of reversal here inside of NVIDIA. Just noting, again, markets can always feel quote unquote overextended, and they can remain as overextended as they want. Nothing ever has to bounce just because you feel like it's extended or oversold or this thing's got to bounce, right? It doesn't have to happen that way. But given that we've made a move through the support trend line, we're coming off of a number of days of oversold. And again, I just sort of disqualified the term oversold, but you get my gist, right? I would be watching, okay, if we have any long setups, valid long setups, we're not just going long because we think it needs to bounce. If there's a long setup on an intraday basis, 15-minute, 5-minute pattern, that to me would be attractive for the gap fill overhead, all right? So NVIDIA, that would be definitely on my radar for the inventory correction if you wanted to watch something other than just the plain old ES on the open. And we'll check in with that ES before the bell actually rings to see if any adjustments have been made. Microsoft up next. What do we have on this one? Clearly the story is the same. Big gap down, overnight low 270, breaking down underneath that. Not a whole lot of structure till we get to about 261. Be aware of that level to the downside. If we get the inventory correction, the gap fills up closer to 280. All right. Because we are significantly underneath that major low there, I would probably just watch for 275 on the upside swing right around in here, right? You don't want to push your luck too far. That's, again, just like the half gap in the ES. You'd probably take off at least half the position, then monitor for continuation with the other half, trail stop higher. Stop has to go to break even as you take the first half off, okay? That's Microsoft. Let's continue along. Amazon. The likes are climbing up there. Wow, thanks, guys. Really appreciate that. That's cool to see. Amazon filled our gap yesterday. Now we're going to be opening on a new gap down. Same framework, again, beating a dead horse here. For anyone new to the stream, we're looking for inventory corrections in almost everything that has a gap down immediately off the open. If it doesn't happen off the open, we know we're going in the direction of the gap or sideways for the rest of the day, right? So Amazon critical hold is actually coming from the daily here at the 2764. As long as that kind of holds, I wouldn't call you crazy if you started looking for hammer candles down here, indecision dojis, basically things that would say, okay, maybe there's potential for a bit of a dead cat bounce. Stop goes under the low of whatever candle that prints, long over the highs, targets the gap fill overhead, right? So wouldn't call you crazy in Amazon for that, noting that we're opening kind of right at the support, which is unlike anything else we've seen on our watch list so far. So Amazon, a little bit of a different story here, right? That's what I would say. Shola, talking about NVIDIA looking like a head and shoulders on the daily. Let's see. Not really seeing it. Not really seeing it. Maybe if you wanted to count it as this, I don't know if that's what you're thinking, but I'm not seeing the head and shoulders pattern here. This, it's not really this. I mean, sure, that technically looks like the pattern, but I don't really think that's in the mind's eye of the market right now. It would just be a break of the support trend line, right? I wouldn't really think of it as a head and shoulders pattern. Hopefully that kind of answers your question there, Shola. Let's move along here and talk about some trade setups. I mean, obviously, almost everything's opening on a gap down today. So what we're going to do here, let me expand this. Yes, MT Beast. I understand you want to look at Twilio. Please, I got it once in the chat. I don't need it 10 more times, all right? All right, so in terms of our pre-market watch list here and what's going on, let's just sort by what's up the most in the pre-market. And obviously, it's all of our energy names and all of the inverse ETFs, right? So MRO, Marathon Oil, big gap up. Obviously, we talked about XLE gapping up as well. Where's this one opening? 22s. Yeah, this could actually be a potentially interesting play, noting that we're gapping green over red, and the target should be here, the high of this overall pattern, around 2372. Let's see how it's doing on volume. Let me quickly expand this here and throw volume on our list of things to be watching. So volume, VOLUMM. It's tough typing behind a keyboard, I'll tell you that. Volume, there it is. Sorry for, that was a little rough. Anyways, volume, let's see how we're doing with volume as well. So pretty poor actually inside of Marathon. Although it's up the most, it doesn't really have the greatest volume. You can see that we've only got about 412 shares going through in the pre-market. Generally, I want to see things that are at least 500,000, if not 1 million. So my eye immediately pulls towards silver, right? If we look at silver, big gap up, obviously. The metals, safe haven, quote unquote, safe haven, right? So we'll see if silver does anything. Silver and gold are the heartbreaker trade. If you look at any gold chart, I mean, sure, it's actually getting some follow through this time around, but look at this. Big move all the way back down, tries to make an attempt here, right back down. Gold and silver are tough to play. Maybe it's different this time around, but it's not really my focus. I'm not a big metals guy, although the volume on silver, as I pointed out, was pretty good in the pre-market here with the gap up. Nonetheless, OXY, oil company, right? Oxy. What do we have here? Gap up, where are we slated to be opening? 40.15. What do we have there? Gapping up and over an inverted hammer. So it's not quite red, but there was some selling pressure yesterday. I would say targets should be here in Oxy, 41.11, based on gapping up and over this candle here, as long as the gap holds, right? So anything that does this reverses back through the open. Target is here. Okay, 41, it's the pre-market high. It's also yesterday's high. Plenty of volume going through on this one. Definitely going to be a watch if you want relative strength. All right, so that's Oxy. mRNA with earnings gapping up. Okay, so that's fairly interesting in the face of all the bad news, gapping up. Well, not technically up, but inside of yesterday's range, invalidating this breakdown pattern from right here. So I wouldn't really even play Myrna long just because of the gap, or not gap, but earnings momentum to the upside, just because the daily pattern's so ugly, right? We're in a daily downtrend. There's no real reason to be thinking about longs here. It would be a different story if we were truly gapping up outside of yesterday's range, maybe gapping up over the resistance trend line, maybe some shorts late to the party would start closing out, but we're not quite there yet. So Myrna doesn't really strike me as the best one. What else do we have here in terms of gap up or things that are higher based in the pre-market with good volume? Silver we talked about. Nothing else. This starts to get into flat territory. We don't want that. Let's go all the way to the bottom of the list, see what's getting hit the worst. DWAC is actually down at the bottom of the list based on a percentage basis, but nonetheless, still just gapping down like everything else. This is one that we just sort of watch. It's a comedy stock. It's not necessarily something that we use for, I don't know what you would say, actually trading, right? This isn't it. It's not it inside of DWAC. What else do we have down below in terms of big moves to the downside with good volume? Lucid getting spanked all the way down towards 22. Would I trade it short here? Probably not. I wouldn't chase it short here, but I would watch for the inventory correction, just like we saw in anything else. Cheaper one. All right. So Lucid, keep an eye on that. Good volume and making a decent move pre-market. Watch for the inventory correction. Let's get into a couple of these requests in the chat now, and then we'll take a quick look at the ES futures before we sign off here. I do want to be out before the bell actually rings so I can focus on a day like today. So first up was TWLO for my guy MT Beast in the chat. What do we have here? Not a whole lot of pre-market volume, to be quite honest with you. Obviously a big gap down, just like everything else. Let me clear up this drawing set. And we'll just start from scratch with some levels here. Obviously, the gap will fill up towards yesterday's low. The opening prints forecasted to be 148, we'll call it. Overnight lows down here, 144, right? So this is the scenario. This is basically everything that we've talked about in today's stream. This is what it boils down to. If we open here, fail to take out the overnight low, trade long back up through the open, that's it. That's exactly it. Trade long through the open for the inventory to correct and make a move closer to the gap fill area, aka yesterday's low of day, right? That's how this play technically works out. All right, so that's what we've got inside of TWLO. If it does something like this, right, and just gets consolidation down here, it's just don't touch. There's nothing going on, right? If we're below the open, you're going to lean bearish. If we're above the open, you're going to lean bullish, especially with the gap overhead. There's no structure there, right? So that's TWLO. To the downside, if it continues to break down underneath the overnight low, so this is the gap and go scenario number 2 that we watch for, not as likely, but if it does happen, something that puts in bear flag down here, descending triangle, whatever, breakdown of 144. What do we have for daily targets here? Let's go out to a weekly just to see what we have for support to our left. Go out to a 5-year chart. Then we'll speed things up. So we're kind of sitting right at a prior pivot breakout point right around in here, which led to that big move higher. Underneath us, what do we have? I'd probably just start looking for 130, so about a $14 move to the downside based on prior structure in there. This move here was basically vertical straight up, not a whole lot of structure to trade through there. Okay, so 130 is your downside in Twillo if it doesn't give us the gap fill, gap and trap to the upside, right? We're coming up on about 5 minutes to the bell. There was a couple more names dropped in the chat. Google was dropped twice, so we'll do that one, GOOGL, and then we'll move back on over to the ES futures to prep one last time before the bell actually rings. Zooming in here. Gap down, just like everything else, right? Here's our low, right around in here. We're slated to be opening slightly above it, so we have an equal low, potentially, on the open if it starts to fill the gap overhead, aka if it takes out the opening print after failing to do something like that, your target's simply up here. The framework is the exact same for almost every single stock that we'll be watching today. If it takes out the overnight low, you're either playing short or avoiding longs at all costs, all right? It's as simple as that inside of our stuff. So that's Google. We covered Lucid, AMD. That'll be the last one we do, and then I want to take a quick look at the broad market with you guys. Then I'll sign off for focus time. AMD, what do we have? Gap down, obviously, like everything else. It's the same story, guys. Same exact story. There's your overnight low around 102.65. Forecasted opening prints 103.61, and the gap fill is up here, closer to 109, right? Large gap. Could it fill to the upside all in one day? Yeah, if you look at AMD's average range on a good day, AMD could definitely fill that gap to the upside. I'm not saying it has to all the way. However, the inventory correction is just the play we watch out for. So anything that looks like this, there's your long, right? Back up through the open. If you're more conservative, maybe it's a break of 105. That's a pre-market resistance level for the gap fill up closer to 109. If it takes out the overnight low, as I just pointed out with Google, it's either shorts, looking for downside continuation. I would look for this low right here, which is going to be around 99.50, 100 psychological as well, or just chop, right? And avoid longs. Just don't get wrapped up in that type of activity. So that's what we've got in AMD. Last one, we're going to go back on over to our ES futures. It's not like things have moved dramatically here. We are still above the overnight low as of right now. We're not making some sort of crazy push into the open, so there is still possibility for this inventory correction to play out. And yes, it is skewed in terms of how the overnight players are positioned. We're net short, correct? So that's going to wrap it up here. I do want to get off before the bell actually rings today. On your way out, if you would do me a favor and just press the thumbs up button, I would really appreciate that. It's been fantastic doing these streams. Quick announcement as well. I'll be traveling today, so about midday, I'm going to sign off the Discord. I also will not be around tomorrow morning for a pre-market live stream. I'll wish you all the best from the Discord, but I actually won't be at my desk to trade myself on Friday, okay? So that's all I've got for you today. About 3 minutes until the bell rings. Take some time, mentally prepare here. There's nothing wrong with sitting out as well. Don't forget that. If this sort of stuff, fighting a big trend like this scares you, there's no reason to jump in if you're not mentally prepared for it, all right? There's nothing wrong with sitting on the sidelines, waiting for some structure to pan out, and then go from there, okay? That's truly all I've got for you. I hope to see you in the Discord. Check out that link down below right here. It is in the description of the video if you want a clickable link, or you could type it in manually. It's just a redirect, and I'll see you in there, all right? Good luck trading today, everybody. Wish you all the best. And for anyone involved with the Russia-Ukraine situation, truly hoping for peace over there soon for you guys. All right, I'll see you.